This involves the Financial Stability Oversight Council, and the Treasury just released a readout of a meeting they were having. The key news here, crossing the wire, was that there was a proposal put on the table to revive the idea here of making non-banks into that systemic risk labeling. I think we have Bloomberg's Michael McKee standing by right now to give us a little bit more insight about this. And Mike, unpack this for us, because this basically has to do with traditional banks, which are deemed systemically important and thus have to follow certain rules, and sort of non-banks, which are kind of outside that system, and maybe in an acknowledgement that they are too just as systemically important.
Well, that's basically it, Romaine. The council is looking at the idea that some of these non-banks could have enough counterparty exposure, could be large enough that if there were an issue, they might have problems. And this is not a guarantee that they're going to go ahead and do something. The Treasury staff basically gave them a series of options for whether or not they want to go ahead and designate non-bank financial companies for Fed supervision. Now, that would put them in the category of significant financial institutions, and then that would require, under Fed guidance, they follow regulatory rules for how they operate, and also that they probably would have to have some sort of capital set aside. So you can imagine this would be a bit of a fight if they do it, but it is something that they are apparently going to look into. This was basically, as you mentioned, a meeting of the Financial Stability Oversight Council, where they went over their priorities for 2023, what they're going to be looking into. Not a guarantee they're going to do this, but it is something that's on the table.